Hello, this is Msrk Sturdy of 7 Days Ahead with this week's multi-asset technical strategies, the week of the 19th of October 2021. Essentially, it's no change. We are excited by the strength of the dollar against the euro, the yen in particular, and also against the sterling, and we think that it's going to go further in all those markets. The sterling is relatively strong, and so it's risen against the euro, and that too is an exciting juncture. Let's quickly go through those. Starting with the granddaddy of them all, the dollar-euro, we have here the situation of a small top formation being formed against this massive resistance established many years ago in the against the euro. Looking at the detail of this, we have a completed head and shoulder, complex head and shoulders top, double top, shoulder, head, head, shoulder. In any event, it's completed, it looks good to send the market on down to at least 1.1. That's a big move. That's yet to happen, and we think it's going to happen. Dollar yen, again, we're going to a massive weakening of the yen. On the very long-term charts, we think it's going to go up to at least 119. Here's another. This is a rising wedge broken in the weekly chart, and in the day chart we've seen breaking up through these prior highs, all of which is bullish, all of which suggests more to come. Looking at the sterling, I said the sterling was relatively strong, and so it is. Look at here's the not so much a big breakout here. We're still within this long established trading range since the 2016 referendum, but that there's no question it's pushing at the top of the more recent trading range established since April this year. If this market can hold above this 1802 level, I think the sterling will want to strengthen further. Again, we have a similar attempted breakout here in the very short-term chart, 118.33. If it can find good support here now on the pullback and push on, that's an exciting possibility for sterling against the euro. In the summary, we are not excited by stocks at the moment. It doesn't mean to say there aren't some interesting moves going on there. In particular, I would point out the FTSE. The FTSE is now looking relatively strong, particularly in the very short-term chart. It's pushed above this 71.50 two prior highs, which should now act as good support. And in the weekly chart, this is the weekly. Oh, that's the weekly December chart. Note also the failed key reversals in this chart altogether, which makes all this movement above the 71.54 all the more impressive. So this is interesting in the sterling. It has not been, as you know, a market we've tended to favour, nor do we still, particularly in the longer term, but its short-term push-up suggests great resilience within these markets. I would look, even though there's no breakout here, good resilience in the Euro Stoxx 50. Good resilience in the Nikkei 225, and indeed good resilience in the S&P here, bouncing back up. We're not bullish with these markets directly yet. They've got more to do, more to prove, but worth watching. They are resilient. They're not failing as yet. They need to be watched. In the bond markets, the only bond market that we're excited by on all time frames is the gilt. Here's the break up in the yield chart of the long-term yield resistance. Here's the completion in that same yield chart in the weekly take of a head and shoulders reversal, suggesting moves up to 1.8 yield. So plenty more to come, plenty more movement in the gilt to come. The others aren't so exciting. The gilt is the standout one. They haven't completed the equivalent of this head and shoulders reversal. Look at the German Bund, for example. In the weekly chart, it's close to, it needs to break above these levels, and then we've got something, it'll have a breakout, but not quite there yet, not with the clarity of the gilt. Oil, we remain very bullish. Here's the quarterly continuation chart, a break up through a pretty well established downtrend resistance. The monthly is this is new, this break up through this band of resistance from prior lows, which had broken the market in 2018, and we've broken back above that. So that's important. There is the possibility of regarding this as the Head and Shoulders reversal. I'm not entirely sure about it. It might be, it might not be. In any event, to have broken up above this 96.90 level, two highs at that same level, suggests if on a pullback it should find support there. This may or may not be a neckline. If it is a Head and Shoulders reversal, suggests moves up to 140. Here's the well-established, nicely formed bull trend in price. Prior highs acting as good support, good support, good support. And that's it for this week. Thanks very much.